Well, good morning, everyone. Welcome back to our regular trading room here, our Thursday morning session. Just bear with me here one moment. I'll get you my screen share going. Markets just opened. A little bit of a quieter open than what I was anticipating. I thought for sure after yesterday's session, they would just be crazy coming out of the gate this morning, but not yet. The NQ still all twisted, not quite sure what it wants to do. You can see there wasn't very much happening in the overnight last night. It's easiest to see here on the Eagle. This is all that was going on in the overnight. What a quiet overnight session. We're working on a green bar sell actually, and you know what? I might take advantage of that. We're just about to flip the ATR over, and I might throw a trend line across the bottom here too. So the green bar sell occurs when you enter the hard edge and the eagle starts printing, well, a green bar. No, they're still peeling away from that, so we'll leave that alone for the moment. Okay, well, they're just trying to get their footing, which is okay. It's just the first few minutes after the open, so we'll let them stew a little bit. Oh, Neil, I see you're in the room here this morning. I did get your email. I'm sorry I haven't responded yet. I will do it. Just my emails have gotten a little backed up again, folks. So if you've written me and I haven't replied, I will. I just haven't had an opportunity to do so just yet. But I haven't forgotten about you. Soybeans also moving a little bit sideways. Soybeans also showing us a green bar sell. The market kind of breaking down here. This is actually a little further along than the one we were looking at in the NQ, but easily coverable. All tongue-tied this morning. I might give it just a little bit more room, actually. Maybe I'll risk it up above there. So what I've done is, you see, we're currently against the ATR. I'm waiting for this bar to turn the ATR over, and then I'm going to enter below the low of that bar. So it does look as though soybeans might be trying to head just a little bit lower. So you see now how the ATR is turned over. And, well, so far so good. A little bit of buying support coming in here off of these lows, as we might anticipate. So if there is a reaction here, hopefully my stops are far enough away to give this trade a chance at working out. Otherwise, we should see them tail off a little bit here through the rest of the session. Oops, sorry, I said soybeans. This is the British pound. Sorry, don't know what I was thinking there. So for those of you looking at your soybean chart saying, what the heck is Eric looking at? He's looking at the British pound. That's what he's looking at. Oh my, the NQ gave us a buy signal here on the hawk. Right here was our first micro-macro cross that must have occurred while I was trading my British pound / soybean market. And we had a corresponding signal here on the Raptor also. Both signals having decent follow through. This is being a tough little market to get a handle on at the moment. We'll throw a couple trend lines on here just for optics sake. See if we can't spot if the market is starting to shallow or get too aggressive. The British pound is actually a pretty cool market as far as currencies go. It can be a little bit crazy, no question. But because of the smaller risk amount, it's a pretty good one to keep an eye on. Crude oil, let's take a look at what's going on in crude oil. Here's crude oil on the Eagle. Fairly steady progression. Yesterday, surprisingly, was a real mess in spite of the inventory report. And it looks like in the overnight, they smartened up a little bit. Just waiting for a better signal to develop here. At the moment, not much really, at least not on the Eagle. The hawk is working itself into a macro pullback signal, but I would not be surprised, or I would welcome a move back here to the hard edge. Oh, before I forget, folks, I do need to cut this morning's session short. I need to be somewhere early this morning. Here we go, gold. Are we still in June gold? 1 second before I load gold. Joe is asking, can you take a look at the gold chart? Absolutely. Let me make sure June is still the current month. It is. Thanks, Jim. Jim says the advanced decline almost even up, 1,400 or almost 1,500 to the good and 1,100 to the negative. So that's actually fairly bullish, or moderately bullish, I should say. Just waiting for gold to load up on the NQ chart. What is it with my data this morning? My poor computer seems to be running awfully slow. Almost there. Just waiting for the Raptor to load. Right now it looks like gold is at a little bit of a crossroads. The Eagle chart looking a little bit bearish, as does the Raptor chart. Let's gotta force that Raptor cloud to boot. Ay, 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 my poor computer needs a scrubbing. What in the world is bogging this thing down? Do I have any extra programs open this morning? All right, here we go with the gold market. So here is the Eagle. So gold has been in a little bit of a slide. Shoot a trend line across the top here, just see how it's been behaving. Actually breached the trend line back here, which is suggestive of a market getting a little bit stronger. I'll shoot a trend line across the bottom. All right, so they broke a little bit here. They got a little bit shallow down here. Both these things suggesting that gold is getting a little bit stronger, but we're right into the hard edge of our Eagle right now. So I would anticipate some sort of sell signal to come out of that. How big of a follow through it's going to have, of course, is difficult to say at this point. We do have a first micro-macro cross signal brewing in gold right now. Because the dominant trend seems to be down at the moment, this is the type of trade, if you're going to take it, you're going to have to try to risk it as deep as you can. So I can't take it down there. Or alternatively, what you can do is you can take it above the high. That gives you a little bit more leeway in managing your stop. Now they did slip us here, scoundrels. take a look here at the Falcon where we're working on our trend change signal. Well, actually, we just produced the trend change signal, didn't we? So here's the up, a couple of down attempts. Here comes the up again. You get a chance for a second push on the entry here, but like the hawk trade, this is a situation where you're going to want to try to cover as deep as you can. Let's go now to the Raptor because I know Joe was asking about the Geiger counter. So the Raptor not really producing a signal just yet. The band still giving us more of a bearish tone. This thing on? Yeah. It's rare to see gold hold up like that. Oh, good. Joe says he's long at 1202. Really, 1202. And he's at break even. That's way down here. Well done. Very interesting comment from Joe, and I get this a lot. Joe says, I need to add the other birds so I get a different view of the market. The Raptor is probably the most popular tool right now. I'm thinking what appeals to people. I don't really know, but I'm thinking what appeals to folks is that it's a compilation of the other three birds. But the market conditions do change, right? So even though the Raptor tries to incorporate elements of the scalper, the swing trader, and the trend trader, it's not quite the same as having the specific tool for each environment. You know, if you think of your all-in-one screwdriver in that big bulky plastic handle, yeah, it's a handy tool to have, but it's not quite the same as having, you know, a proper Phillips head screwdriver that you can whack the handle hard if you need to, or whatever. You know, I'm not going to grope for tool analogies here. I'm sure you guys get the point I'm trying to make. Here, if we look at the short-term trend line on the Raptor, well, we broke here also, so that's encouraging. And let's shoot a trend line across the bottom. We broke here, so yeah, things are looking a little bit more bullish for gold right now. Just a little tip when you're using your trend lines, and of course there are always exceptions, but what most people do is when the market breaks a trend line like this, they start adjusting their trend line. Right? They'll throw in another trend line like so, and they'll say, okay, well, this is the new trend line now. But what they fail to realize is that when the market breaks the trend line like this, it's overextended itself. If we had an oscillator on here like a stochastic or RSI or something, this market would be very much oversold. And it would be looking to rally from here. So Joe, you're absolutely correct. Joe says, I sensed that it was a fake out, and you were absolutely correct. The signal was not worth taking. And now that the market has rallied, we would have expected it to honor the trend line somewhere around here, but instead it broke through the upside of the trend line. all we're seeing right now is a test of the extreme. This is pretty much the last chance the sellers have to regain the market. If the buyers step up here now and produce a buy signal, that should be a pretty decent buy. Oh, can you guys hear me? Did we lose sound? Okay, good. Um, I'll just let David know. Hold on a second. All right, we'll send that to David. So we'll just sit here on the gold market for a little bit, see what gives. Mark says we're getting a first micro-macro crossover signal on the NQ. Let me see if I can put the NQ up over here, and we'll pull that over. I might have to invest in more monitors still. And Michelle is asking about the NASDAQ Falcon signal, which I will be happy to do. Joe says, I just added a third monitor. I still think it's not enough. You can't have enough screen real estate, that's for sure. All right, we'll just let that gold trade percolate a little. It didn't bring us in here, so I'll cancel that. And let's take a look now. All right, so let's look at Mark's first micro-macro crossover signal. Looking good, Mark. So everything went out of sync here. Our trend lines are out of sync, our filter is out of sync, our bar color is out of sync, and now it's trying to come back into sync. So yes, this is very much a first micro-macro cross signal. I will point out that all these yellow bar clusters are giving me pause. So I would probably dial down the risk amount just in case it leads to a fake. Yellow bars always occur when the market changes trend, as they do here and they do down here. But then once the market prints a signal, there's normally some sort of follow through, right? It prints a signal, there's some follow through. Now, these follow throughs from yesterday were exceptional, but even so, the point is there's some follow through, right? Here we have clusters of yellow bars, prints a signal, follow through. Compare that with what we're looking at right now. Where we're printing yellow bars, we're printing signals, but very little follow through. We did have a first micro-macro cross here. It did follow through, but look at how quickly it died, right? Came right back, died. All right, so here's now our warning dot for our first micro-macro cross. There's the triangle hash mark. I'm going to try to cover this trade as low as I can. Okay, I can't do it all the way down there. And I'm sorry I'm taking a little bit long explaining this. The market has already popped. But sometimes I'll look at the flat part in the macro line. And it looks like they're going to try to give it a go. So a couple ticks yet, we should hit the break even. So the trade would roll to break even now. That would be enough to get our break even trigger. And well done, Mark. Good call. Good call. That was exactly the right call there. Okay, Michelle is asking, can you look at the last NQ Falcon signal, the trendline crossover at 45.03 and a quarter? 45.03 and a quarter. Okay, right here. Michelle says, I took the signal, but I'm not sure if there was an obvious reason not to take the signal. Well, it's kind of like an early trend change signal in a way. You know, if we look at the trend change signal back here, where the trend line changed color, this was a stronger signal, even though it gave you some heat. So we have this up, down, up. Market brings you in, gives you some heat, but eventually goes higher. Here we come back with a trend line touch. Is that the one you took? 45.03 and a quarter. Yeah, that could have been the one you took. No, there's nothing wrong with this signal. It's a proper signal. The only, well, I guess we're into the primary resistance on our support and resistance suite. The only thing that's kind of holding me back here a little bit is the major decline that we saw toward the end of yesterday's session, and just the overall hesitation of follow-throughs. You know, like here was our trend change signal, right? Here was the old resistance area. Normally, we would anticipate the market to, you know, make a little bit of progress, maybe do something like that as it gets closer to this resistance up here, and now maybe hesitate for a couple of bars, and then start to come back and maybe go a little higher again, and then maybe sideways. But we're not getting that kind of thing going on, are we? Even off of the initial trend change signal down here. Off of this trend change signal here, the market brings us in, gives us heat, and even after that, well, it did make a little bit of a pop. But there's just this ongoing struggle today. It almost, I think your trade will work out. I'm fairly confident you're on the right side of the market. It's just, my goodness, you're clawing for every single tick. So until the market smartens up, this is probably the kind of day where I'm going to dial down the risk amount. Even on signals like this, on this late filter entry signal, which we know to be a high probability signal, I would still dial down the risk portion. I would still try to cover it deep. I would still try to, you know, adjust my stops as quickly as I could. Because my concern is, given the big decline, even though we're making a rather large and sustained retracement, it may be just that. This may just turn out to be a great big bear flag, and then the market heading lower. I think everybody and their brother has been waiting for the NQ to decline for some time now. Oh, Michelle says she took the break even +1. She couldn't take the heat. I think there's a reason the buyers are laboring. You know, I keep telling you the big money is on the surprise side, but I'm not so sure it's on the surprise side this time. Yeah, Jim says the advanced decline pretty much even up, 1400 to the positive, 1300 to the negative. But no, your signal was sound, Michelle. There wasn't anything wrong with your signal. It's just, I don't know, is there a report due out? Am I missing something today? They're getting a little bit of traction now, but still it's like, come on, you guys. Some of these candles here with these long tails, I could try to roll my stop underneath there, but at the same time, you know, you need to give the trade a chance, right? If the trade doesn't work out, okay, so you made a bad decision. At least you haven't risked too much. Right? Losing 1% isn't going to wipe out your account. Joe is asking, can you take a look at crude oil? Absolutely, Joe. Let's park that over there. And, or actually, I know what I'll do. Let me get crude oil back over here. And gold made a little bit of a hop to the upside. So hopefully my stops were deep enough that we rode out that little swing that we had. Okay, enough of gold. Let's put the NQ back up here and we'll get crude oil back. Jim says the E-mini and the NASDAQ are strong, but the Russell is weak. Honestly, folks, I am all over selling the NQ. I tried to sell it as a position trade yesterday, but the darn market whipsawed me, just rallied a little bit too much, which I am most annoyed about. But that's the fun part of trading. Okay, so here's crude oil now on the Falcon. Oh, I should throw crude on the Raptor also. So here's crude oil on the Raptor. I think I have the wrong parameters here. Yes, for crude oil, the start time is a little different. Okay, I'll deal with that later. So crude oil a little bit in rally mode right now. So we can shoot a trend line across the bottom here. Came into the soft edge, gave us a soft edge bounce, came out with a signal. Had I taken this one, I honestly would have had to cover it somewhere down here, somewhere near the hard edge, because I would be anticipating a double pullback, which is common when the market hits the soft edge. We're without a signal at the moment, at least on the Raptor. A little bit of a spike here in the buying. The sellers disappeared. The programmer suggests that when you see a spike in the buying, they're running the stops. They're trying to flush out the buyers. It's going to occur at a significant support or resistance area, which it seems to have happened here at the highs at around 60.15. So we'll see if he's correct. Right now you can see the trail indicator, or the trade indicator, is short-term bearish. We've got that little red envelope around our bar suggesting that the bias, the overall bias, is a little bit more bearish right now. If we start to shallow out here, if we start to get, see the market come up short and test the lows, I think we're going to see crude oil continue lower, but we've still got a little bit, need to wait on a little bit more structure before we get too anxious doing that. Just wanted to save this chart for later. Here we are on the Falcon. Still not much on the Falcon. We did get a trend change signal right here just after the market opened. You could have treated this as an early trend change signal, but it would have been, happening real time, it would have been a little bit more difficult to take. Wow, Mark knocked it out of the park with that first micro macro cross signal. Look at the follow through on that thing. Gotta love those high probability signals. Of course, the NQ being very NQ-like and defying what everybody thinks it should do. At least it makes me feel a little better about getting whipsawed out of my trade yesterday. So we've just blown through the top edge of this trading range. Doesn't matter which way you draw it, we're still outside of it, even if you drew it like this. Okay, our Geiger counter turning very weak here. Well, that was a very decent move. I'm almost thinking that may have been the move of the day, given the way the market is behaving today. Oh, Joe's putting me through my paces. Can you take a look at the 30-year bond? Absolutely, Joe. Why not? Let me just clean up a couple things here. Okay, 30-year bond coming up. Way to go, Mark. A different Mark. Says the NQ was indicating and still is a strong signal on the Eagle. I took it at 45.03 and a quarter. So that would be our first trend change signal, 45.03 and a quarter. I think that was this one right about here. Took profit 45.13 and a quarter for a nice profit, almost at my $400 goal again. I'm liking this DTS system. Well done, Mark. Way to go. You know, sometimes we just need to get out of our own way, isn't it? Isn't that the truth? We just gotta trust the system, trust the instruments. I met a fellow who was a pilot who was a trader, and he was a very good trader. And that's because pilots don't second guess their instruments, right? If the instrument says your fuel is at however many pounds of fuel, well then that's what your fuel is. If your altimeter says you're flying at such and such an altitude, well then he believes the altimeter. Whereas the rest of us who just drive cars, if the fuel gauge is buried in the empty, we always try to sneak a few more miles out of it. And then every once in a while, we got to phone the tow truck or the wife or the husband, as the case may be, and say, I ran out of fuel. All right, here's the 30-year bond. Notice the 30-year bond is in a rally. This is the 30-year bond on the Falcon, of course. And what is odd about this is the bonds should be moving opposite the stock indices. So I used to watch a bond chart as a companion chart. I didn't trade it that often. Every once in a while, I would take a trade. But for the most part, I used it as a companion chart, a confirmation tool, if you will. If I saw the stock indices rally and I did not see the bonds declining, I strongly suspected the strength of the rally. So we just saw the NQ and the E-mini take a big hop up. The mini Dow probably did also. But the bonds have not budged. Or if anything, the bonds have gone higher. Which again suggests that the current rally that we're seeing may be running on fumes. I don't know, folks. It could just be a lot of wishful thinking. Well, not wishful. Nobody wants to see the stock market decline, but you know, it's trading at some pretty exorbitant levels. Like Joe says, a bizarro market, like that bizarro cartoon. Well, and there goes the advanced decline again. Jim says the advanced decline has spiked. It's almost 600 to the good now. So no real trade on the bond market as far as the Falcon is concerned. Here's the Eagle. We did get a red bar buy down here, but honestly, that would have been a very difficult signal to take. I'm not sure I would have committed to that even after it flipped. Well, you know what? After it flipped the ATR, then that's pretty much my last criterion. I'd have to think about doing something with it. Oops, I can't get outside that range, so. This is the thing with trading the bonds also at $31 a tick, it is a very expensive market to try to cover above swing highs and lows. But you'd be well rewarded for your efforts so far. That's a pretty decent move right there. Trade forecasters suggesting we are in scalp mode right now for about another half an hour. Well, that's making sense because that's exactly where we're at. Alright, well, you can see our Geiger counter here on the NQ getting buried in the red after that little pop-up. That may have been to get everybody long who wants to get long. And if the buying dries up, look for the bottom to fall. It's trading punches. Buyers, if this were a normal trending market, we got the run up, we would see the buyers poke like this, we would see them retrace and give us a macro pullback, maybe bounce a little, and then continue higher. But just the fact that they're taking so long. This is not a macro pullback signal, by the way, not yet anyway. Michelle asks a great question, and it'll probably take me to the bottom of the hour, after which I'm going to have to run. Michelle asks, Eric, if we're just watching paint dry, how do you deal with the emotion of losing? Statistically, we have losing trades, but so often after a loss, it completely affects the way I trade thereafter. Have you come up against anything like this? Oh boy, have I. It's one thing for you to have a losing trade in private, but when I have a losing trade, it's out there for the world to see. So yes, I can get very gun shy sometimes, and I end up missing good opportunities because of that. The emotion part is very difficult to deal with. essentially the best course of action I've found is just to steel your nerve and take the signal. If you've taken a good signal and the market has, for whatever reason, failed, don't beat yourself up for it. So if you, let's go back here. We're just going to use an example. Okay, let's take a look at this one right here. You look at this, no, that's not a good signal. All right, well, we'll use this as an example. It's not a good signal. I thought it was my first micro-macro cross, but really it's not. First micro-macro cross occurred right here. But we're going to pretend. We're going to pretend that this is the first micro-macro cross. And you take the signal, and let's say you set it up like so. The market brings you in and stops you out. Okay, you can't beat yourself up for taking the signal because it was a good signal to take. But whenever you have a losing trade, you should try to treat it as a learning opportunity. What could I have done better? So whenever I have a losing trade, I always try to watch it a little bit further, and then I can make a note in my journal about what I might have done to turn that loser into a winner. So you can see in this instance, had I run a deeper stop, I would have been okay, right? So rather than run the stop at the stop strategy when the signal printed, what I needed to do was run a much deeper stop. So next time I get a signal like this, and this is why you guys see me run deep stops, I run a signal like this, I'm going to be looking where does at the very least, where does the micro line flatten out? Or pardon me, the macro line, the big heavy one. Where does it flatten out? Where does it turn? Because that's likely to be an area of support for this market. Can I cover below the swing low? Yes, I can. All right. Yes, I'm only in with a onesie. What I'll probably do is double my profit objective to try to get squeeze a little bit more out of the onesie. But let's say I go and run it below the swing and the macro. So I'm taking some heat, and lo and behold, that was enough to hold me in the trade. And of course, now that the buyers have shown that they're serious, I would also become more serious about rolling my stops, right? I would no longer leave the stop down here. I would roll the stop up here. So yes, losing trades do affect the way I trade. I think it will affect everybody. You know, we're only human. Emotions emotions are always going to plague us. I was just thinking of the various items in my office that I've broken over the years due to trades that have not worked out the way I anticipated. But when you do have a losing trade, like I say, if you had a solid signal that you took and the trade did not work out, A, don't beat yourself up. B, take a look at, was there something you could have done differently to make that trade work? C, if the trade still failed, there was nothing you could have done, then it's just one of those things. Right? We are trying to predict the future here, folks. And the future, of course, is unwritten, but we're trying to forecast what might happen given certain conditions that are present. So just like here with this first micro macro cross signal, okay, it's, you know, I expressed my concerns. There were a lot of yellow bars here. There was a lot of reluctance on the part of the market to go, but it is a first micro macro cross signal. So where am I going to cover this? Am I going to cover it at the stop strategy? that would seem a little tight for me. Even this swing low might seem to be a little bit too cozy, so I would probably opt for this swing low here. It also gives me the added support from that swing low. I can still get in with adequate size. If I'm not happy about how this trade looks, dial down the risk amount. And you can see in this instance, it actually didn't waste any time getting to where it wanted to go. Now, I also think it's important that when you're in a trade, that you manage the trade according to your plan. I know Michelle said she popped out of this trade back here. So here was the signal. So Michelle's looking at this, and it's a trend line touch, also a trend change signal, right? Because the trend line was pink here, turned green. So we've got our up, our down, our up. This is a tradable signal. So where are we going to cover this trade? Well, same issue as before, right? The market seems to be laboring, so I'm not so sure I want to go with the current stop strategy. I would feel better about risking it down here. Can I take that? Yes, I can. And if I'm still not comfortable with it, remember, I'm going to dial down the risk amount. So now that we've taken this trade and we're in, and we're taking some heat, now we need to manage this trade. Remember, when you take this trade, let the trade manager do its work. One thing that has taken a load of stress away from my trading, winning trades or losing trades, is this whole risk manager module. That even if I've done something silly and taken a poor trade, the risk manager controls my risk exposure, right? So I'm never losing more than I can afford. Yes, a $500 hit would be very unpleasant, but I can afford it, right? It's not going to decimate my account to the point where I can no longer trade. And for you, it might be different. For you, if you're trading, say, a $10,000 account, this may be $200. Would it be unpleasant to lose $200? Yes, of course it would. Is it going to ruin your account to the point where you can no longer trade? No, of course not. Now I'm also watching carefully for an opportunity to manage my trade, which will take a little bit of heat off as well. So when I see the market starting to advance again, now I can think, oh, all right, maybe I'll roll my stop up a little bit. Maybe I'll roll it underneath these lows here. So now I've effectively cut my risk exposure in half. Now I've got about $250 at risk, or only about 1% of my capital. And then the market gives me a little bit more heat. Oops, sorry, hit the wrong button. But it eventually goes and hits my profit objective. And in this case, it actually did a whole lot better. So I know exactly what you're talking about, Michelle. It's easy to get gun shy after a few losing trades. And honestly, sometimes the thing to do is just stop and take a break. Sometimes, you know, we've got a long weekend coming up. Don't look at your charts all weekend. I don't know if you guys normally do that. I know that I do because of the writing that I do. But give yourself a break. Go do something else. Clear your head. You will be amazed how much clearer everything looks when you take a short break. That's why I try to take a vacation at least once a year, a couple times a year, just to get away, clear your head, not think about trading. Of course, Adam always wants me to take the laptop with me. No, Adam, that's not the point. I want to clear my head. I want to get away. And then when you come back, everything looks so clean and fresh, and you actually see stuff again. But try not to put pressure on yourself. Try to As I said, try to manage the trades the best way that you can. If you have a losing trade, try to learn from it and never ever beat yourself up for taking a bad trade or a losing trade on a good signal. Michelle says, I'm okay. A good day, bad day, I'm okay. It's not how I feel is relevant. I know, but it's difficult to get over the feelings, right? You get to the point where you start second guessing yourself. And that's where you need to go back into sim or do some serious back testing where this is a very easy thing to do. If you have your arrows enabled, go to your indicators, go to your Falcon, and then here at the bottom where it says arrow location, you can turn that off. So it says do not plot. And now while you're in sim mode, just take your bar and just scroll it back randomly. And now play what we call the right edge game, where you're just going through bar by bar and you're looking at the signals that print and you say, okay, here's a signal. Do I take it? Don't I take it? And this is going to get you some confidence in your trading abilities, in your ability to read signals, in your ability to distinguish the high probability signals. And you can still use your trade manager. You can still run your ATR stops and such. And you can set it up, say, like that, or let's say you choose to set it up way up here. And now just play it through bar by bar. Okay, this signal didn't trip. It gives you another signal, same thing. How am I going to take this trade? Am I going to take this trade? Am I going to pass on the trade? Am I going to, cover it here, cover up here? These are all things that you need to learn to become proficient with your tools. I know it's easier watching somebody do it, and it gives you, I understand there's a hand-holding component in the room here, and that's part of the reason I'm here also, to give you confidence in this sort of thing. But you really need to go through, and without cheating, go through your charts like this and see how the trade worked out, see how you would have managed the trade. And you have the luxury of going bar by bar and making decisions bar by bar. There's no rush, right? You can take as long as you need. But that's what's going to give you the confidence to take your first micro macro cross signals or your macro pullback signals or whatever the case may be. And that's where the fear component is coming in, is that you're unsure of the signal. And if you're unsure whether or not you can trust the signal that's printing, you need to do a little bit more practice. Great suggestion, Mark. Mark says, mention to Michelle the Mind Muscles website. And hold on a second, I'm trying to find it. Let me see if I can flag the... Rich is actually doing a seminar. I don't know if he did it the other day or if it's today. Stop it. Okay. There's the registration link. Oh, it was Tuesday. Okay, well, there should be a... oh, stop it. Yes, okay, it looks like the webinar is expired. You're right. I'm just checking Rich's page to see whether or not he's got another link to get there. Yes, that's an excellent suggestion, Mark, because that's exactly what Rich does. He gets you out of the funk of a losing trade. There we go. And you're absolutely correct. Mark says there's a lot of free resources on his site. There you go. And Rich knows his stuff. He's not talking out of his hat. He's been a trader. He's had a trading firm. He knows his stuff. Okay, a few more questions, then I'm afraid I'm going to have to run. Okay, Mark says, I broke the arm off my office chair once, and that's what got me thinking I needed help. Mine muscles came along not too long after that, and my office furniture was saved. Yes. My office chair is okay because it's metal, but the desk lamp has seen better days. All right, you guys, if you're going to be trading the NQ this afternoon, I can't help it. I still think this market is ready to tank in spite of its overall bullishness. There's no denying it's been keen to head higher today. Well, you can only take the signals that the market's giving you, right? So I would anticipate some sort of macro pullback here on the hawk. A retreat into the hard edge would not be out of the question. You can see we're almost getting like this rounded bottom type formation, which is actually kind of bullish, believe it or not, because it will turn into what they call a cup and handle, where you get a cup, a handle, and then the market, if it breaks, will tend to do one of those. Well, yeah, I guess end of the day, we can only trade what the charts are showing us. My own personal preference would be to see the NQ tail off a little bit, but honestly, it hasn't given me any of that. Every time I look to sell it, it rallies. All right, you guys, we'll catch you tomorrow morning. Friday session, likely to be more of the same. We are going into a holiday weekend in the US, so the traders are likely to get busy early, although nobody's going to want to hold over a 3-day weekend. So expect a little bit more of this sideways, non-committed trading. We'll talk to you then. Bye for now.